Good evening and welcome to another edition of Tone's Market Analysis. And tonight is, what is today? Today is Thursday, December 16th, I believe, or 15th. Oh man, really lose track of time here. December 15th, Thursday, December 15th. And we're going to do a quick show following the Fed rate announcement. I did a show right before the Fed rate announcement, and now we're going to do one right after. I didn't get to it yesterday, but it's good that we're doing it today. Just a quick follow-up of the show. Oh, forgot to share my screen. There we go. Wasn't anything on there before that, but now we're up and running. So the one thing I talked about the day before the announcement was this concept of the FOMC drift. And what happens there is that markets tend to go up the day before the committee speaks and the day of the committee speaks. And that accounts for a lot of the gains in the S&P 500. What we saw the day before was a huge move in the market. It went up almost 1%. Yesterday, the day of the announcement, the market pulled back a little bit. And today, the day after the announcement, we had another good up day. Okay, so that's just a quick follow-up on that. And also, in terms of interest rates, I also tweeted this out. I might as well quickly go through some of my tweets. This came out somewhere. I already forgot where. Just 6% forecasted lower bond yields in 2017. But the last time they were forecasting even less of a chance of lower bond yields was a year and a half ago, back when bond yields were 244. And then we went all the way down. And again, of course, hindsight is 2020. There was this monster divergence right here in bond yields or interest rates, and your RSI went up. This was a huge run up. We are now overbought on the RSI in terms of bond yields. And this is the 10-year bond, that 10-year government bond, the treasury rate. And we're now coming down. This is as a few days ago. I haven't really looked what it is now. Okay, let's drop that one off the list. Yeah, you know what? I'll get to those later. All right, so let's jump right into the markets. My quick look, did anything happen since market close at 4 p.m. and 6:36 as it is right now? And nothing really happened. Gold isn't dropping anymore. Additionally, oil seems to have stabilized. The markets are kind of flat now. Okay, so nothing, no announcements after the close. We're all set. All right, let's look at the S&P 500. And those were my arrows before the Fed announcement. And I said that the market was getting toppy. Of course, I was also looking at the market being toppy around this area here, around back when the S&P made a new high, a new all-time high at 2,215-ish. And I was looking for a pullback all the way to the 50-day. That obviously did not happen. We went back up. I'm still expecting this pullback. I did not know what kind of reaction we would get to the Fed statement. We had a negative reaction that day, and I think that is the telling reaction. We bounced back today. We did not break the high of today's Thursday, right? So we did not break Tuesday's high. And I think it was just a one bad oversold day. We bounced back. So I am expecting lower prices from here. So I don't think we're going to go higher. So I'm actually going to delete this arrow. I'm going to delete that arrow. And I'm going to leave this one in there for the next time I shoot this video, which is probably going to be over the weekend. But over the weekend, I'm going to focus on weekly charts. I'm not going to focus on daily charts. I'm starting to make more annotations on TradingView so that I'll try and put together a weekly chart on TradingView, and then we'll be looking at that. So I'll probably save this arrow for mid next week, and then we'll see how that goes. Now, I guess I'm gonna put a green arrow in as well, maybe just in general, just to be sure that I am still looking for at least a secondary high. I'll adjust this arrow later. We'll see whether we go to a new all-time high or not. So whatever happens from here is, and I purposely drew it with like this gap here because it's too early to tell. Even if we do pull back, it's too early to tell how far down it's going to go. So I'm just going to leave it this way, and then I'll adjust these things in next video. All right. Okay. So the reason I have this comment here, and I guess I'll zoom in. I don't pay attention to many people's opinions in the stock market, but one of the opinions I do pay attention to is a man named Tom DeMark. And on this day, November 11th, he changed his bullish view on the markets from 2,203, which was the top he was expecting, and followed by an 11% pullback. He then updated his view to we're going to top around 2168 to 2,275, followed by a 5 to 6% correction. So, and it looks like the top in the S&P 500 was 2,277. So that's just literally right at the high end of that range. One of the reasons why I pay attention to him is not that I think he's some kind of a prophet, is because a fair amount of Wall Street pays attention to him. So if other traders are paying attention, you kind of get this self-fulfilling prophecy. I try not to follow anyone, which is why my trading strategies are kind of completely independent of all that noise. But I do pay attention to this. And he has his own proprietary indicators that are very, very costly. But if you know the basics, you can kind of put together similar things. I don't think I'm in violation of any trademarks here by kind of programming something similar, which probably has a few bugs in it. I'm still working on that. And as I look at it, we had a sell signal right here on this top bar. There's a number there, and then it's followed by I have a 9 there. So things are looking poppy, and we're definitely due for a pullback, and that's what I'm looking for. Here's the Dow Jones. So again, same thing. The count happens to be the same, though that's not always the case. But S&P and the Dow, they do trade kind of similar. I don't have the NASDAQ in TradingView yet. I will be adding it. All right, so let's talk about the gorilla in the room, I guess, gold. Oh, man, you know, how I wish this sarcastic candle that was right here like a week and a half ago, and this sarcastic candle that was like a week and a half ago was still there. And unfortunately, I removed it because I was expecting a bit of a pullback. I guess a dead cat bounce, you can say. And I'm still expecting this pullback to the top side, though now it might be a little bit delayed. I'm going to zoom in on this a little bit. And I'm going to throw my new indicator on. I don't know how long I'll be using it. Just took a while to program it together, so now I'm kind of playing around with it. And today was a 10, and then I'm waiting for that 13, and then there might be a bit of a pullback. So perhaps this might get delayed a little bit, so I'm going to drop my arrows. Look, oil, oil. We'll get to oil in a minute. Gold's going to keep going down. I am pretty bearish on gold, very bearish on gold. I've been bearish on gold for a while. I had that little, everyone went bullish on gold after that bounce from 10,044. all the way to like 1350 or how 1365, wherever the high was. I saw so many people online. That's it. Gold has bottomed. We're going up. Everyone called the bottom, and I never did, though I wasn't making these videos, so nobody knew I didn't call a bottom on it, and it just didn't feel right to me, and I explained why in my other videos. So I don't know what these people are going to do when gold goes under $1,000. I guess they'll be forced to change their mind. We'll see how many of them admit to the huge mistake that they've made. And if they don't admit a mistake, then stop listening to them. If they admit a mistake, then continue listening to them. That's kind of how I judge people in this trading world, because no one is going to get it all right. That's also why I keep my arrows and I let you guys know where they were before and where they're going. All right, so speaking of gold, I ran across this cool chart on the internet today. I tweeted it out. People are already pissed at me. So this is the commodity price index going all the way back to 1800, 1805 to be exact. And you see all these peaks in commodities followed by monster bear markets. And then a peak that kind of flattened out for a while. And these bear markets are lasting like 20 years. They're not short. The last one here, this is what all of the gold proponents keep talking about. The gold peak in 1980 when gold was $800, and then we hit a bear market till like 2001, 2002 when it bottomed at like $200 or something for gold. So that was a 20+ year bear market. So if we have the same situation, and I know everyone believes that gold is going to like $1 million an ounce, which is nonsense. But if a similar situation repeats, I mean, if you take this as an anomaly, if there's another bear market in commodities in general, and gold's just another commodity, and you're looking at a 20-year bear market, I mean, this is what you're kind of looking at. I mean, gold bottoming around 2024, which or even that might be early, right? Because it peaked in 2011, so 20 years would be like 2031. But that's really going out there. I don't think it would last that long, mostly because there's way more money printing now than before. But I still think like gold is not all that useful. So even if we don't go to 2024, even if this bear market lasts 25%, that's still 5 years, right? I mean, we've already been 5 years. So maybe it'll last 50%, right? So maybe another 5 years, or maybe another 2 or 3 years. But in any case, I think the price of gold to come all the way down and probably meet this peak. Maybe I'll draw a line right here. I'll make it blue. Like this peak right here is perfectly reasonable. Like there's nothing in any of these charts that would make it look unreasonable. And a chart that was done back in April, and since April, gold has now done like this. Yeah, like around here, right down to this line. So we're way on schedule. So where can gold go? Well, it can kind of go here, right? I mean, this is only going down to 900 an ounce. And you saw my projections in my long-term charts where I'm actually looking at it to go earlier. But yeah, so it's totally like it's within reason for the bear market in commodities to last for another 10 years from here. And throughout that time, gold can stagnate or even drop. All right, let's not save any of those. Okay, so that was gold. Oil. So here's oil. Here are my last two arrows. I mean, the chart's going to get cluttered soon, so I'm going to be dropping those arrows. And, well, how about now? Well, now we might get a bit of a pullback. Let me see. Let me get the arrow going here. There we go. Let's make this red. I mean, gold just got a little bit overbought. But then again, the RSI is still not in overbought territory. The MACD may cross probably Monday. Will Russia stop the slow down on its oil production. Maybe, maybe not. Who knows? The world seems to be bullish oil for a while. I will buy into the consensus that oil is still bullish. Signs of it not to be bullish. So I am going to be looking for higher gold prices. But let's see what happens if it pulls back to the 50-day and maybe the 200-day. As long as the 50 is staying above the 200-day, we're pretty good on that front. All right. Yeah, so not much to say about oil at all. But another thing that may cause a little extra drop in oil is the rise of the US dollar, which has clearly broken above this Fibonacci line that I've been talking about for a while. You also do see my little 9 there, and that usually corresponds to either a sell signal or a pullback. And if it's a pullback, it lasts like 1 to 4 days or something like that. There's like whole books on these indicators, but yeah, I haven't really. I'm still learning this stuff myself. You know, you're always learning. No one's ever an expert, like a full expert. And yeah, so the dollar broke out, and I see nothing, right? I mean, I see minor pullbacks, and I know we're going to get overbought, but there's absolutely no reason why this giant move from 80 to 100, this $20 move, there's absolutely nothing stopping this from repeating again all the way back to 120. So I can draw like a general arrow on here, a very general arrow. Though, kind of this, but it's obviously things aren't going to go straight up. So I'm going to move this over, and then I'm going to. All right, come on. All right, why am I having technical difficulties right now? All right, so that side moves. Why doesn't the top side move? Or is it picking up that indicator? Yeah, there we go. All right, so that wasted like a whole 30 seconds trying to draw an arrow. Yeah, so that's basically my view on the US dollar. I see absolutely nothing stopping it. So we're just going to go up, and then we'll see how this arrow progresses, assuming I'm making these videos, you know, into 2019 or something like that. And this chart's still around. All right, before I jump into Bitcoin, I don't normally talk about individual stocks, but like I always said, I trade the NASDAQ. I watch the NASDAQ, so I keep an eye on the NASDAQ stocks. And like a couple of them so I noticed YELP. YELP gapped on earnings, went all the way up, put in my doji right here, like a dragonfly shooting star, one of my favorite candles. Of course, the candle came after a triangle, which meant for it to break out higher, but candlestick patterns here. And then we went down, and then once we had what, one to close the gap, line of the gap, and it went back up, and then the third time was a charm, and then it closed the gap completely. Then earnings again, it gaps up, bounces the first time, goes back up, bounces the second time, and then kind of stays there. And today I saw it trade below 35 bucks, and I just said, ooh, this might close the gap, right? So might maybe go down to 32. So I just tweeted that out. Then it pulled back up, and then I think we're closed above 35. But interesting if it closes the gap, because that's exactly what it did earlier. So I thought that was one stock, and the other one was Google. This is the third candle in a row signaling topping pattern. This is they have a shooting star followed by 2 dojis, and they're kind of wide, but it's Google. I mean, it's a high-flying stock. Of course, a doji by itself is meaningless unless it comes with a confirmation. And Google isn't really known for these things. Like over here, you have it all the way. I guess I'll draw a circle or something. Like you kind of have it here, but it wasn't really at the top. It was after the top, like the day after the top. So, it's not ideal. And these together, you get a shooting star, which is something I don't really like doing, but I know some traders do. So it's not really known for it. There's nothing here at the bottom. That's, that's not for me, even though it's at a 50-day, but the 50-day is flat. So, Google doesn't really follow too many of these patterns between the averages, but again, it's kind of choppy in these averages. When I see these 3 candles in a row, I'm like, oh, maybe a little pullback back to the 50-day, which would make sense because this was resistance here, and you know what, even there. So, it's partially meaningful. So I thought those were interesting, so I tweeted those out. All right, finally, let's talk about Bitcoin real quick. And Bitcoin hasn't done anything since last time I talked about it. We are still looking at 777. We're looking at 777. We're just above or right at the previous high. We're right at just above the bottom of this trend channel. We're just above the Fibonacci. It's waiting. It's waiting for that breakout. God, if SegWit goes in, that would be amazing. That would just do wonders. So hopefully SegWit would go through in the near future, and then we go up. Again, another view. I've been looking at this pattern here, and the best way to look at it is it might be like a giant cup and handle here as a giant cup, and then this is a small candle. I don't really want to pull this in much. Yeah, I kind of lose some of the granularity. So it could be like a giant cup and handle from around this area, and boom, and then the handle. And then if you do get this breakout, look out above, right? Because the bottom here, the average bottom here is about, let's say, I'll be generous, 250, and this is 750, right? So we're talking $500 move that can happen in a hurry. So I'm fairly bullish Bitcoin. These are my old charts, by the way, back when I was writing for Cointelegraph. This is one of the ones I used to use. So if you find my old articles, you can see it. Yeah, so by itself, I'm not sure what the shape is. You can call it a triangle. You can call it a cup and handle where the handles are getting smaller, but it's not. But either way, I'm bullish. So, this chart can probably use an arrow. And I'm very rarely bullish on Bitcoin, surprisingly. I'm bullish long-term. I'm very rarely bullish short-term because it feels like Bitcoin is almost always overbought, other than in very clear situations like here and there. But when this happens, there's like a panic. And the one thing you're thinking is, holy shit, Bitcoin infrastructure is about to collapse, which it can any day now, right? So, you can say all you want, but you have to have real cojones to be buying Bitcoin right here and be buying Bitcoin right here. And I kind of missed out. I kept looking for my 110 bottom on Bitcoin this entire time, and that bottom never came. So I never got my chance to load up. All right, so I'm bullish from here, guys. Oh, forgot currencies. Damn, I haven't migrated them over yet. All right, so unfortunately, I haven't migrated currencies over into TradingView yet, and stock charts haven't yet updated today's price. And I'm not even gonna bother looking at the daily view of the euro because it's a complete disaster. There's nothing there. So here's the weekly euro, and right now we're down at 104. So we're already here. So today was a bad day. Let's double check that, right? So here's the euro, and here's today's candle, right? So we're down at 104. So we're in uncharted territory here. Let's see what's going on. Oh my God, that's weekly. Oh my God, that's monthly. Jesus. How far back does this go? 2003. Whoa. Yeah, we're gonna break this. I mean, we're going low. We're going to 0.8. I mean, that's I have no doubt in my mind that this is going to a new low. I can't even go further than this, right? This is monthly. Oh, there was no euro. That's why I can't go further. That's when it started. Yeah, and once euro breaks parity, you're going to see panic set in. I mean, real panic. Yeah, not India, not Venezuela, not not Zimbabwe. You're going to see real panic because unlike India and what they're doing, eliminating currency, and Venezuela, that complete mess, and Australia is now wants to get rid of the 100 Aussie note. I mean, the 100 in Australia is maybe a little more meaningful, but that's not panic. The reason why Europe is going to panic is because people in Europe still actually have money. People in India, the average person doesn't really have much money. So that's not the same kind of panic, right? When you have, when you've saved a few €100,000 in retirement, and you're watching your $200,000 retirement saving depreciate at a rate of 20% a year, not a year, but one for 1.4, and we're gonna go down to 1 in 2 years, right? So yeah, that's 20% a year for 2 years. You're gonna panic, and you're gonna panic with a substantial amount of money, and this is another reason why I really like Bitcoin. So euro's a mess, and it's only going to get worse. It's not going to get better. And that's my outlook for the euro on this monthly chart. Nothing else to say. So British pound, how'd the pound do today? Yeah, as you guys can see, I don't really trade currency. Just pay attention to geopolitical stuff. And so the pound is at 120 long term. Yeah, 1.2 is good support area. I'm not as bearish on the pound, but if the US dollar goes up 20%, then you have to assume the pound will also fall 20%. So the pound may fall and make a new low, but unlike the euro, which is going to probably break apart and completely panic, this will actually help the Brits to completely separate themselves from the European Union and kind of be on their own, which would be a good thing. And I think the pound would bounce. So I'm not as worried on the pound. If the pound breaks this 1.2 low and goes down to 1.1 or goes down to parity of 1 to 1, I would see this more as a potential chance for a bounce back to like 1.4 or something. I mean, that's I can't really draw on this right now, but 1.4 looks like pretty good support resistance line. So I can definitely see a bounce back to 1.4, especially if the euro is collapsing, right? Because remember, the UK, if UK is seen as a stable, confident political system, and the euro is breaking apart, yes, a lot of that money is going to go to the US dollar. Some of that money might even go to China. I'm hoping a bunch of that money goes into Bitcoin, but a pretty big chunk of that money might go to the British pound. So the collapse of the euro might actually cause a rise in the pound because people in Europe are familiar with the UK. They're familiar with London, and London would gladly take the rich people from Europe if they want to run away from from the implosion of their political system. So I can see, I can definitely see a bounce in the pound as a beneficiary of the collapse of the euro. But now we're getting into real macro discussions. For now, we're back at this 50-day moving average on a daily chart. Would it bounce? I honestly don't know. It kind of more depends on the dollar. All right. So on that note, I will call it a night. And got this done within 30 minutes, which is an improvement. And I will try to shorten these things up. Good luck trading, guys, and I'll try and do one of these next time on Sunday.